Being in drawdown is the biggest reason why traders end up failing their challenges through to frustration or revenge trading or FOMO, whatever it is, right? But drawdown is the biggest thing, right? So how can we prevent drawdown? So when you understand the higher time frame bias, you are more likely to avoid drawdown. So let's explain how you can avoid drawdown, right? So the roadblock that I've seen a lot of traders go through is that they're struggling to find high quality setups, especially on the lower time frames. Now, the secret to lower time frames is understanding what the higher time frames are doing, right? We've all heard this saying before, but the real trick lies in multi-time frame analysis. So the solution is just to stick with me through the end of this video, and we're going to be going over a set of mechanical rules that you can apply to any Forex pair to pass any prop firm challenge. So that being said, let's get into the video. So this is euro dollar on the daily time frame. If we quickly zoom out again, I've made videos on this previously in the series, but what we have over here is we have a structural high and a structural low. So we've come into a premium area and we've really melted down. And the reason we've melted down is because this was a fair value gap area in the premium, and that's what's led to the result down. Now, if we look at most recent price action over here, we've broken structure to the downside. So we have a new low down here. And now from here, we could see a potential correction. So this is all the daily time frame shows us. We haven't got too much on the daily time frame, but if we now head down to the 4-hour time frame, we can begin to piece the puzzle in a little bit more detail, right? So again, multi-time frame analysis, right? The daily has given us this much. The daily has given us that we're bearish, and we have a most recent structural low down here. This is the low that we're currently dealing with, and this is the daily low. Now, on the 4-hour time frame, we can use this to our advantage. So on the 4-hour time frame, I already marked out the structure. The structure again is structure high, over here structure low, structure high, and structure low. Now last week we had a pretty bullish week, so you have to ask yourself, why are we bullish in a bearish market? Well, it's quite simple, right? When we look at the way structure works, price will break structure, have a pullback, break structure, pullback, break structure, pullback. So we're using the same basic analogy over here. So we have a structural high up here and we have a structural low down here. This here is the 50%, which is the Fibonacci level, the most important number, and it is the equilibrium. Now, what do we mean by the equilibrium? The equilibrium is essentially the midpoint between the high and the low of the dealing range. Again, what do we mean by dealing range? It's the most recent high. So this is euro dollar. This high is going to be at 1.092, and this low is going to be at 1.03. Roughly 1.03, I believe that's 1.0336, right? So this is the areas that we're currently looking at on euro dollar. So from here, if you were to ask me, what is your higher time frame bias for the week ahead, right? I don't use the Dixie because the Dixie isn't important. All you need is the currency pair itself. Now from here, we start looking at liquidity and fair value gaps. So notice how we have a very large pool of liquidity over here. This is trendline liquidity. This is buy-side liquidity. Price will gravitate towards buy-side liquidity. But what makes buy-side liquidity higher probability is the fact that we have a fair value gap in the premium, right? So we have a premium fair value gap. A premium fair value gap is where price wants to target. Just like over here, we have another premium fair value gap. So we have two regions for price to target, excuse my spelling, right? So trendline liquidity and fair value gaps. So from here on euro dollar, the only bias I have is bullish. And the reason for that is because I expect price to do this and then this. That is how simple it is to form a higher time frame bias. I did that in under 5 minutes, right? So again, let's understand where the fair value gaps are. So yes, we have a fair value gap in the discount. So price could come into this fair value gap before heading higher. What you see over here is the weekly power of 3 indicator. Now, this gives us the weekly opening price, which is the most important thing I bang on about on every single one of my socials. The weekly opening price will determine whether you want to be buying or selling. So this is the weekly opening price. So euro dollar, we've opened at 1.05778. So you really want to be looking for buys below this red line over here. You want to see price come into a higher time frame fair value before shooting higher. So this is my current outlook for euro dollar. And the reason why I am supporting this is the following. We have a 50% level here. We are in the discount, and we're simply targeting buy side liquidity in the form of a trend line in this case, and we're simply targeting sell side imbalance, right? So buy side liquidity and sell side imbalance. These are the only two things the market will see, right? How we do this is by using the power of 3 indicator, right? So again, on the 15-minute time frame, let's quickly look in. Let's make the charts a little bit clearer for people. So yes, we have a massive pool of liquidity over here, huge pool of liquidity. But more importantly, what do we expect from the 15-minute time frame, right? So the 15-minute time frame, again, weekly time frame, 15-minute time frame, we've opened here. What we're looking for is an expansion lower, right? Coming into this fair value gap on the 4 hour before looking for a market structure shift to the upside. Now, what will qualify our market structure shift? Well, there's three things, right? The first thing is it needs to be below the weekly opening. That is the most important thing. The second thing is that it must give a valid market structure shift, must leave a fair value gap, and it must sweep some kind of liquidity, right? So a previous day low. So what you're typically looking for is, if this is Monday's low, you want to see Monday's low be swept, right? Price must come below Monday's low and then give us the market structure shift and the fair value gap. Once we have the fair value gap from here, let's say if the fair value gap was here, it becomes very, very easy to key off an entry, right? Because we're below the weekly opening, we're below, the weekly opening, we've swept liquidity, and we're simply looking for a move higher. This is how simple it is to form a higher time frame bias. And we're now going to do this on the next currency pair, which is GBPUSD, right? So again, GBPUSD moves in correlation with EURUSD pretty much. Again, this is the daily time frame. Now, one thing to be cautious of over here on the daily time frame is our structure is bullish, right? We've had a break of structure over here. Price is bullish, right? But what do we see in terms of our pricing, right? We are very close to the equilibrium. Again, using the fib tool, I've gone over this in previous videos. You want to use a fib tool to understand your PD array levels or your premium and discount array levels. So this is a structural low and this is a structural high. Notice how close price is to the equilibrium. It is basically on the equilibrium. So if we zoom into most recent price action, right, there's two scenarios that we have on GBPUSD. Yes, we could head lower before ultimately heading up to this POI. Or if we were to have a bearish week, we could come into this POI before reversing lower. So these are the two potential scenarios we have on GBPUSD, because price will always gravitate towards these fair value gaps. That's just how the market is designed. The market's designed to gravitate towards fair value gaps. So now we use the 4-hour time frame and understand which fair value gap price is likely to gravitate towards first, right? So really, if we look at this over here, our 4-hour structure is pretty bearish, right? We've been bearish ever since. So we have a very large structural range over here, structural high, structural low. And last week we had a bullish week, right? So we saw a change of character or a change of state of delivery, whatever you want to call it. It was just over here. This is a change of character or chalk or whatever you want to call it, right? So this is a change of character over here. Again, just like euro dollar, notice how we have we have a large fair value gap over here in this region. So if price were to continue bullish, which I think it will, because we're in a correction stage, right? We're below an old low, so this is a correction stage. We could come into this area, look for some strength, and then from here, key off a fair value gap before heading higher. Now, what makes this kind of entry valid, right? We're looking for the weekly Judah swing down here. What makes this valid is a market structure shift and a fair value gap that is below the weekly opening price. That is the most important thing. This is how I form my high time frame bias on the two most prominent Forex pairs, so Euro Dollar and GBP USD. Now, if we move on to another pair, this is AUDUSD, Australian dollar, right? Again, I've already got the most recent kind of structural low and structural high on the daily time frame. Again, we've been in a very, very large range since 2022. It's been over 2 years. We've been in this structural range, oscillating up and down. But from here, when we're oscillating, the fib tool becomes very, very powerful because we have, again, the 50%. And look at how prices behaved in the upper half, right? Look how prices behaved over here, near this area of resistance or area of supply, whatever you want to call it. We see price reacting down, reacting down, reacting down. All these large impulses to the downside have been in the in the premium, and all of the moves to the upside have been in the discount, right? So we're looking for buys below the 50%, and we're looking for sells above the 50%, right? So what we're looking for here is essentially buys because we're below the 50% level. Now, the 4-hour time frame paints a very, very clear picture because we are bullish in terms of our structure. Structurally, we are bullish, right? We've had a break of structure over here, right? Some people may say we're bullish. Some people might say we're bearish in terms of the overall most recent structure, right? But overall, just to keep things simple, we are between this structural low and this structural high. So we're below the 50% level. So take a minute to understand, should we be looking for buys or should we be looking for sells, right? What is the answer? Well, the answer is you want to be looking for buys. So if I quickly draw your attention to the left over here, we had a fair value gap over here, right? So this fair value gap was deep inside the discount, as you can see. The price has basically filled this fair value gap and respected it. We've struggled to really close below it. With that being said, now we have a 50% over here. We're below the 50%, which can give us indications to look for buys, right? So I do want to see price do something like this and then ultimately head higher, right? Ultimately just head higher. And the reason for that is because we're in a higher time frame discount and we've just mitigated a higher time frame level. So from here, it's very, very simple. Again, 15-minute structure has been marked out. We have a structural low and we have a structural high. So what I'm looking for is, again, between this low and this high, is I would like to see price do something like this, come below the weekly opening price, give us a shift of the structure, and then key off the fair value gap below the weekly opening. This is the simplest way to form a high time frame bias, and it removes a lot of psychological issues that traders have across the board, right? If you simply waited for price to come below the weekly opening, you have a much higher chance of succeeding as a trader. Now, the last pair we're going to look at now is NZDUSD. These are pairs that have been requested by many people. Again, let's just look at the 4-hour time frame and understand, right? So the 4-hour time frame, we had multiple bearish breaks of structure. So we had a bearish break over here. We had a bearish break over here. We had a bearish break over here. So overall, our structure is basically bearish, right? We understand we are dealing between a structural high and a structural low, right? This is how we use our Fibonacci tool. So now notice how we've had an aggressive move from the premium all the way down to the discount, right? Also, look at the intricacy in price. Look at how price behaves over here. I want to draw traders' attention to this area over here, right? So this is a POI. And the reason it's a POI is because we are in discount, right? That's the first thing. So we are in discount and we've left a fair value gap. So these are the two reasons I was interested in this area. Hence, we call it a point of interest. Look at how prices behaved near this point of interest, right? Prices respected it with a wick before ultimately heading higher. I expect the bullishness on NZDUSD to continue. So if we just head up back to the daily time frame, sorry, not the daily, the 4-hour time frame, what we understand over here is that we are in a deep discount. Right, this is the 50% level. We are significantly below that. So what do I expect for this week on NZDUSD? So NZDUSD, notice how we have some fair value gaps below us, typically this one over here. So what I'm looking for, again, we've had our weekly opening. We're bearish to start the week. I would expect price to come down, mitigate this, and head higher. So to end the video, just want to quickly go over the basics of what we can expect, right? So we're looking for buys below the weekly opening, right? I'll just write WO for short. We want to see a market structure shift qualified by a fair value gap below the weekly opening. And what really glues this together is the fact that we want to take out sell side liquidity. We want to see a sweep of the previous day low, or even better, the previous week low, right? The previous week's low. This is the recipe to how you can trade any Forex pair. You can take it to gold or even S&P 500, NASDAQ, US 30, right? You can trade any market using these basic pillars of buying below the weekly opening, waiting for a market structure shift qualified by a fair value gap below the weekly opening price, and waiting for a sweep of previous day or previous week liquidity before getting involved. So this is my overall narratives and outlooks for the week. I'm pretty bullish on all the pairs I've been through: Euro dollar, GBPUSD, AUDUSD, NZDUSD. So I'm pretty bullish across the dollar pairs this week. Bearish on USD CAD. But yeah, that's a quick overview of higher time frame bias part 5. Take care and see you all in the next one.